Good morning. I'm Vince. This is the GoldFix. The dollar is down 11 at 103.80. Bond yields are unchanged at 432. The S&P is 50.88, up 8 handles. VIX is 14%, down half a percentage point. Gold is 20.25, up $1. Silver is 22.74, flat. Platinum, palladium are mixed. Copper is down 2.6 cents at $3.85. Crude oil is down 96 cents at 77.64. That's spot. And natural gas is down 5 cents at 172. Crypto is down. Ethereum is weaker than Bitcoin, and grains are slightly higher. Okay, the headline: unimpressed with China's Year of the Dragon so far. That is the title of a report by MUFG, which is attached at the bottom. We have some research to share and some insights on that research, but there's absolutely nothing on gold right now, or silver. In fact, we're not even seeing the CTA information that we usually see. So let's work with what we have right now. Quote, commodities have greeted China's return from its Lunar New Year holidays in fairly somber mood, signaling investors want to see further evidence that the authorities are tackling the economy's deep-seated woes before turning constructive. The Year of the Dragon may be here, but it's not exerting the firepower that commodities are craving just yet. That's an MUFG report, Mitsubishi report, and it's attached. Chart today goes along with that quote, and it is a chart of the market's behavior in commodities specifically, going into and coming out of the Chinese New Year, the Lunar New Year. And you can see that things are flat to slightly softer. Energy had peaked up for a while. I have something to say about that, and I'll hold off for the moment. Yesterday's activity. Gold peaked a little bit higher. Peaked, meaning peaked its head up a little bit higher, and found selling once again, another long wick on a daily. Silver met selling all day. Oil, natural gas. Oil was firm but fading. Natural gas just fading. U.S. equities, no roof in sight because of NVIDIA. Bonds were choppy with no real direction. The dollar had a weak open and a strong close. I'm not really sure why that is. Probably a response to the Fed speakers, which came out implying, well, we'll get to that in a second. Crypto is weaker, still range bound, but it's uncoupling from stocks. We'll talk about that as well today. Today, there's no data. Notable headlines. Fed's Cook said she would like to have greater confidence that inflation is converging to 2% before beginning to cut the policy rate, and believes risks towards achieving employment and inflation goals are moving into a better balance, while she now sees two-sided risks in considering monetary policy. Why such a long quote there when I don't usually like to do that? Because she's breaking the ice on hikes. That last sentence there, that last phrase there, now sees two-sided risks in considering monetary policy, is the shot across the bow. And if we see a couple more bullish inflationary signals, they may actually hike. Goldman Sachs pushed back its first Fed rate cut in forecast to June from May, and now only sees 4 rate cuts this year instead of 5 cuts. And they'll be pushing it back more and more as time goes on, because banks generally don't jump ahead to catch up. They lag, which is a mistake, but there you have it. White House announces more than 500 new sanctions against Russia for its ongoing war in Ukraine. We roll our eyes at sanctions, and they are certainly not having the desired effect we want. But there are also unforeseen reactions. So a sanction could affect a person, and that person may react poorly, which would undermine, Putin's leadership somehow. Now, I'm not saying that's going to happen. I'm just saying that the sanctions initial role has failed, ostensibly, and now the secondary role is to constantly drip, and maybe something will crack. And by the way, they failed, so they're not going to stop doing them, because that would be an admission of defeat. Geopolitics. U.S. charged 4 mariners from an Arabian Sea vessel transporting suspected Iranian-made advanced conventional weapons. Again, everything geopolitical that isn't a war right now is about pulling someone off sides or showing the world that they're going off sides in advance of something else you'll do. Israeli foreign minister says, we will not be patient for a longer period in order to reach diplomatic solution on the Lebanese front, according to Sky News Arabia. So they're going to get aggressive again. China's envoy for Korean Peninsula Affairs told U.S.'s North Korea Affairs that China will continue to play a constructive role in promoting the political settlement of issues concerning the Korean Peninsula, et cetera, et cetera, et cetera. Okay, so they felt the need to say that, however you want to talk about it. All right, let's go through the markets today. The thing that's going to tie everything together is everything is doing what an incumbent president would want it to do going into an election. Okay, if we start looking at it that way, you'll see that if things continue in the way they are, then there'll be no change in policy that could affect things continuing the way they are. And that's it. Despite the fact that we're ostensibly in World War III. But that's another conversation. Gold is capped. The buyer is done. No one will sell. We'll look at these charts. Silver sold all the way up against gold. Oil is also range-bound. Stocks are broadening global rally. It's the NVIDIA news spurred global stocks to rally, not just U.S. So it's broadening, just not broadening in the U.S. Bitcoin, I think that should be interesting because Bitcoin did not rally along with tech stocks. So as much as Bitcoin can be driven by tech stock flows, it hasn't been the last day or two. Therefore, one should be concerned that if you could be bullish and you could say, oh, Bitcoin's going to catch up, that's fine, as a trader. But if tech sells off, Bitcoin could be especially vulnerable. Anyway, so let's take a look at those charts. So we'll go to the dollar. Start with the dollar. All right, so we're on an hourly here. Dollar started weak, finished strong yesterday. 10-year bonds, choppy and gradually higher on the rate side. Stocks, you can see what happened there, just roofed, right? Came in higher, traded higher in an orderly fashion all day. Meanwhile, NVIDIA was volatile. The VIX, well, there you have it. I mean, nobody needs protection anymore. We're in a new environment, and that environment it's not a Fed put, it's a fiscal put. Gold. Okay, I want to go to the daily on gold so you can see what I'm talking about. There's that line. Here, let's stretch this out a little bit. Right, this was, my line, and my line's not perfect, but it's a line, right? We're above it. You can be bullish above it. You can be bearish below it. But I will say this was buying. We had buying. Here, I'll get rid of the lines. I told you this was a buy order, right? And usually there's a spike higher. We didn't have much of a spike higher. We didn't gap higher today. So should you be bearish? No, you should say this order is filled. And usually when these orders are filled, and this is a bullish statement, usually when these orders are filled and they don't spike higher, they start to work themselves lower. And this is not working lower. So there's buying in there. Is it another order? I don't know. Is it people that just don't want to sell it anymore and just they don't want to go home short on a weekend? Quite possibly. But I think you have to look at this market as, it's capped. It's capped here. And it's floored there. We're right in the middle. So I wouldn't get too excited about it right now, especially with the China thing going on. We'll talk about that more in a second. Silver, on the other hand, someone is buying gold and selling silver again. So you want to take a look at this chart. You want to take a look at this and you can see it, right? The gold-silver ratio is working its way back up. See that? See how 45-degree angle that is? No one's going out there using an algo to buy gold and sell silver. But someone out there is using an algo to buy gold. And they're selling silver when they buy gold. That's what's going on right now. Someone is buying gold and selling silver. Buying gold doesn't have to be one person. It's the market. Everybody wants to buy gold, right? Some people want to buy silver. So they're buying gold, and some people are buying silver, and CTAs, stocks are making new highs, sell more silver, okay? Stocks are making new lows, sell more silver. That's how it works. China's stimulus not working, sell silver. They're just treating silver like a hedge for gold right now. And they've been doing that for about a year. So I would say if we get up to this area, where's that spread again? Gold silver spread. If we get up to this area again, which would be a violent move to get there, but we've had them, heads up. It can go there again. Gold can rally $30 and silver can go nowhere. And you would be saying, why? And I would be saying that's because the central bank isn't buying silver yet. Oil. Oil is also now range bound. So everything is kind of like capped. Have you noticed that? Look at these charts. Look daily, right? We're just entering a cap in gold, not a real cap. I wouldn't call this a cap yet. Silver already rejected the cap. Oil, looks like we're in a, right? Everything's kind of like, you can call this a rounding bottom. Break above these and we're going up. Natural gas, different market. Natural gas, right? Oh, it's up 10 cents. Oh, it's up 5 cents. Well, it's on the way back down. Bitcoin, I think, is the most interesting chart right now because Bitcoin is this is a market maker's delight. This is what a market maker does when they're doing their job to support an asset. So they're keeping it here, keeping it in a range as long as they have flows. They're not looking to make too much money. They're looking to keep it here. So either someone is accumulating or it's in a holding pattern. I don't know what the answer to that is, but I've seen this before, and this usually comes right before a stock is no longer supported by market makers. So everyone bought going into the IPO, we'll call it, right? Then the sell-off is from the grayscale, and now you have the orderly rally and the roof. Now, either it stays here and goes up, or it stays here and goes down. I'm thinking it stays here and goes down if stocks come off. And if stocks keep going up and this doesn't catch fire, whether you agree with it catching fire for tied into technology or not is irrelevant. There's people put money into it because, that's what they do. That's what they do. Anyway, so my plan today, well, first of all, let's start here. Very depressing, okay? Newmont wasn't one of the stocks that I bought, but when Druckenmiller bought, I reassessed and I said, okay, dividends are safe, and I bought some miners. Well, Newmont they shit the bed yesterday, and that's really bad for the industry. So that means there's less money. There's less money to go around. There's less acquisitions. Your juniors are going to take it on the chin even more now. They haven't already. And the company made like $88 million free cash flow. That's not good, and I should drill down on their books and see what's going on. So I'm wondering what Druckenmiller is thinking. And the more I think about it, the more I think it's a parking spot. It's not a really good parking spot if that's the case. Anyway, back to the good stuff. All right, today we have the ING commodity report, and we have MUFG, which I quoted from before. And I want to give you something to think about before you read the MUFG report. You're going to start seeing, if you haven't already, people lamenting the fact that, especially from the equity side, say, oh, China's stimulus isn't really that good. Commodities haven't reacted. And I would say, I understand why you would say that, because historically, when China stimulates, commodities lead their stocks. But this time, although it's been choppy, stocks have led the commodities. And why is that? I think it's because China knows that it's got to direct the stimulus into stocks, which is a page from the US book for the last 30 years. They're directing more money into stocks and less money into commodities. Just keep that in mind. So if you're waiting for a bazooka for commodities, we may not get it going into an election. In fact, you can actually see China play nice by not making it go into commodities because of the US election. Maybe they want Biden to be president again. Who knows? That's just the way it works. Where are we? I think that's it. We've got Michael Avery's latest in here as well. I'm Vince. Happy Friday. And by the way, HeartNet's Flow Show just came out. We got it. We're looking through it. And we're going to do a walkthrough of it today and have it out later on. Cheers.